These charts will make you want to invest all of your money in Tesla stock. Check this out. Revenue increased by about 8 times, while the operating expenses, including research and development, did not even double during this time. And then, of course, when you compare Tesla to most other big companies, Tesla is growing exponentially while other companies are shrinking their net income. Tesla, of course, spends no money on advertising, while other companies have to spend so much money on just ads because their products are nowhere near as good. Even the mainstream analysts agree that Tesla is a good buy. Look here, Tesla is number 2 in terms of the percentage to catch up to the price target. Price targets are 12 months by the way, and Tesla has a median price target of $302 at the moment. And you also have to remember that Tesla is a pretty big company already. I mean, Lucid, for example, is relatively speaking a tiny company, and for Tesla to be so much higher, this is preposterous. Tesla Energy is starting to grow when we look at this chart. Elon said before that Tesla Energy could be as big, if not bigger, than the whole auto business. Even in extremely competitive markets such as Germany, where like so many auto manufacturers are, Tesla just dominates and obliterates everyone still. I mean, it's just totally absurd than a car that's multiple times more expensive. And by multiple, I mean close to 3 times more. That's if you compare it to the long range, which is the most popular one. If you compare it to the standard range, it's still well above 2 times more. Selling, general, and administrative expenses are not growing that fast. And Tesla is barely relying on regulatory credits. You can see it used to be very high, as much as 34% of gross profit. And now it is down to just 5%. Basically, it's at a point where it's not significant anymore, really. It used to be that regulatory credits would exceed by a lot the net income of Tesla, but now it's so little, it's really not significant anymore. Tesla vehicles often sell themselves. One reason for such a thing is because Teslas, they are extremely safe. The top 3 safest cars as tested by NHTSA are all Tesla vehicles. Here's another good chart which shows Tesla's operating expenses on the left side here. And then revenue in blue. As you can see, revenue is growing much faster. Therefore, this is shrinking as time goes by, which is what we want. And this makes it even clearer. This is revenue. So you want revenue to be higher than OPEX. So revenue grows, for example, 80% in 1 year, while OPEX only grew by 14.5% in 1 year. This is the operating leverage that Rob Maurer always talks about. While it might feel that Elon has sold a lot of stock, he still has a very large amount still, which of course incentivizes him to do good long term and protect Tesla stock price so that it doesn't crash completely and that it grows over the long term. Tesla's brand is one of the fastest growing brands in the whole world. And in the long run, perhaps Tesla one day would become the most valuable brand in the whole world. Now, a lot of these charts would not mean much if other companies would be doing better than Tesla, but of course, when you compare other companies with Tesla, they don't look as good. This is operating expenses as percentage of revenues. And you can see Meta, which is Facebook. You know, Facebook is going through its own thing. But when we compare this to Google or Netflix or Apple, Tesla is still looking so much more better. Tesla has a ridiculous advantage when it comes to insurance. Check this out this flywheel, this loop, to be specific, Tesla insurance. So it gamifies the whole thing by giving you a safety score. If you don't have one, well, maybe you don't have a Tesla. It's really good. It makes you think about how you are driving. Let's say if you brake too hard and it's like, oh, okay, yeah, let's not do that again. It like shows you when it happens and everything. It's really good. And that does make you really think seriously how you are driving. This then rewards you with safer driving because your monthly premium is based on your safety score. So the better your safety score, the less you pay. And of course, everyone wants to pay less money. And then because your safety score is better, you are actually driving safer, and that creates less accidents, which then goes through this never-ending loop, therefore giving Tesla insurance a big advantage when compared to any other insurance company. You see, another insurance company may even figure out numbers that maybe would make more sense. And even if Tesla did not have the best numbers to know how much to charge to who, because it can actually create safer driving, it will still beat other insurance companies. I mean, the more you compare Tesla with other companies, the less you want to own other companies, which is one of the reasons why I only own Tesla stock in my stock portfolio. This is Tesla at the top. You can see gross margin in blue for Tesla and operating margin in red. Both of these we want high, ideally, and especially operating margin. You look at Amazon, and that is fairly low. But then, of course, you can make the argument, but Amazon is reinvesting everything, so that's why the net margins are not as high, and that makes Amazon's revenue grow a lot more. Well, how about this? Amazon versus Tesla, revenue growth. Which one is higher? And how many times higher? This is the deeper you dig. A lot of other companies, when I start looking at them, at first like, oh my God, this is amazing. Maybe I should buy this one too. And when I start digging, and then I don't like what I see. Like here, right? I mean, the margins are eh. And then you look at the revenue growth and it's also eh. When you compare it to Tesla. But with Tesla, the more you look at it, the deeper you dig, the better it gets, right? I mean, it's not even close, the comparison. And if you're saying that I'm nitpicking, well, then how about this? These are the big dudes. The Metas, the Amazons, the Apples, Netflix, and Alphabet. It doesn't look as good as Tesla. But out of all of the charts, this is one of my favorite ones. In red, these are earnings per share estimates for basically near term. And that is the stock price. And as the estimates of earnings per share increase, this is the consensus, the stock is decreasing. Normally what is supposed to happen is this. So as the earnings per share estimates increase, the stock price is supposed to keep increasing, and sometimes it jumps way too much, and sometimes it's a little bit below that, but this is somewhat reasonable. Now, this gap is just completely bonkers. Check out this article from steadycompounding.com. Tesla has best-in-class return on invested capital. Tesla is at a solid 29%. Then you run numbers on 29%. Now, we will oversimplify this, but check out what happens. If we say oversimplify this and put $50,000, and if we compound that for 12 years at 29%, how much do you think that is? That's $1 million. Woo! That's almost as good as Tesla stock. This is another one of my favorite charts, Tesla Deliveries. Tesla is growing at about 50% year-over-year deliveries, and from year 2020 to 2021, it almost doubled. Now, typically, historically, when we look, when Tesla doubles in one year, the next year, it's not really 50%, which 2022, that's still going to be, it's looking fairly good. It should be comfortably well over 40%. That's the consensus. And if we listen to Tesla's estimate, their own estimate, it should be just under 50%, and production is going to be roughly right at 50%, according to Troy. But it just keeps getting better. Tesla has a negative cash conversion cycle, which means that Tesla's vehicles are sold before the company has to pay suppliers for the raw materials. Or, in other words, Tesla suppliers are financing its business operations. And this is something you really want to envy. And you know that also Elon works when he has to. He sleeps in a factory and he does work a lot at Tesla when he is not working at Twitter. And now with even long-time Tesla bears changing their tune about Tesla stock, with specifically Wall Street consensus being at $310 for the next 12 months, I can't help myself but buy more Tesla stock. And look at this note from Halter Ferguson Financial. Tesla is growing its sales and profits faster than all the large growth companies with 500 billion market capitalization or more in the US. Yet Wall Street and investors haven't quite figured it out. It is our belief that when we do, it will unlock the next revaluation of Tesla stock higher to match the fundamentals we see in the business. That is why I believe Tesla stock is a huge opportunity for me, and I am putting everything I can. All of my spare cash goes into Tesla stock. With Tesla's fundamentals staying very strong and the catalyst list looking really good, and especially with full self-driving improving and getting better, and Tesla is now able to, look at this, do this super hard turn consistently, regularly, over and over again. No problem. It is hard to be bearish on Tesla stock long term. These are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Posius. Like and subscribe if you haven't yet. And I will see you right here. Thank you so much for watching.